Hey, good afternoon, guys. We're just gonna let some people get logged in here, and we'll get started in just a minute. It's 3:01 on our clock, so we'll give it till 3:03, Matt. How about? And then we'll get started from there.
Perfect.
Hey, good afternoon. For those of you just logging in, we'll give people probably another minute, and then we'll kick this thing off. So appreciate you joining us. Matt, you want to get us started?
Yeah, let's go. Well, I appreciate everyone joining us today. As the email mentioned, we've seen some real growth over the last year at Reliant. And as much as Chris and I would love to take credit for that, it actually has much more to do with our operations team. So we have Colin Van Dyne, our Director of Operations, with us. And he's going to talk a little bit about the growth we've seen in our portfolio in terms of occupancy and revenue, and then some of the technology that we've deployed to get there, and talk about how that works and why we're seeing so much success with it. So with that, let's go to the first slide here, Colin. This is kind of the agenda. Just what I mentioned, we're going to talk about the occupancy year over year and some operational initiatives.
And Matt, maybe before we get into the numbers, Colin, for many of our group, and especially our investors, you know, what's interesting is many times our investors have never met us. They're people who've connected with us in one group or another, or referrals. And you know, they may have seen Matt and I in a webinar, but they don't get to see the rest of the team very often. Would you mind just sharing a quick introduction to you, a little bit about you, and maybe your career prior to Reliant? I think is certainly relevant to how you got to us.
Sure. Yeah, absolutely. Well, appreciate the opportunity to jump on here today. As Chris said, my name is Colin Van Dyne. I'm the Director of Operations, and I have been here for 3 years with Reliant. Most of my history, most of my career has been in retail. So I did most of over a decade of work with Walmart. I'm running several of those stores. As we've said before, I had close to 3,000 employees, and did $850 million in revenue a year. So that's the industry I came from, coming into self-storage and with Reliant.
And can you also tie together how cool we are versus Walmart? Is there a direct corollary to the largest retail on earth and Reliant?
Not even a comparison. I mean, Reliant is that's where it is, right there.
I appreciate that. Well, so just one other question kind of about you, and look, we're gonna, as we talked about last week, we're doing these, you know, bi-weekly educational webinars to give people a sense of kind of the inner workings or a peek behind the curtain at Reliant, but also meet our team members. Colin, with operations, I mean, 3,000 employees versus, you know, we have somewhere in the neighborhood, it depends on the day, of 130 to 150 employees. What are some of the constants that are between the two? I mean, from a retail side and storage, I mean, obviously different business sets for sure, but what are some of the things that you'd say are like consistent no matter where you go?
Well, two things. I mean, and I think two of the most important things. Number one is people. All right, we talk about, and I was just sharing this with the team this morning. I said you have different personalities everywhere. You have really the same personalities, The only thing that is different is the name on the badge, right? So no matter what site, what store, what state, you have all sorts of different names, but you're dealing with the same type of personality. So it's important to know how to manage those different people. And then the other thing that is the same in every industry is you have routines, and your effectiveness is a direct correlation of how well you execute those routines that you have in place for your sites on an operational level. So, Reliant, Walmart, there's people and there's routines, and how you manage people and how you execute those routines are the most important.
Yeah, it's super
Well,
helpful.
Colin. That's a great answer. Good answer.
Well, and I appreciate you sharing that. Hopefully that gives people a little bit of insight, and I'd encourage you to ask any questions you may have. There's a Q&A box on your Zoom taskbar that we'll try to get to whatever questions that come about at the end. Or Matt, if you see something that comes about while we're chatting that's relevant, poke in and interrupt, and we'll stop. But Matt or Colin, let's get into why we're hosting the webinar today, which is, look, the last 12 months in our portfolio in particular have been a pretty incredible ride. Obviously, we're very blessed that COVID as a pandemic has affected us in a positive light, where it's affected so many negatively. So, we're blessed in self-storage to say that it's been an asset class that, COVID has actually been a boon for our business. And so let's talk about a couple of these statistics here. And so we're throwing up some pretty large bullet points. 30% occupancy growth year over year. So walk people through what that means. So where were we last year? I believe these numbers are through the end of July versus where we are this year, and maybe some context to that number.
Sure. Yeah. And this is all encompassing. So, we did lose a couple sites in the mix. We did add a couple, but so these are very close. This time you're correct, coming out of July 2020, on average across the portfolio, we were 62% occupied. And just a couple of weeks ago, coming out of July, we were at 92% occupancy. So, like you said, tremendous growth in the middle of COVID, and we did very well. We were talking earlier today. I would be remiss to say that this is all Reliant, right? Because there are certainly some winds that are blowing in everybody's sails in this industry. I don't think you would talk to any operator that would say, "Hey, we've had a bad year." I think everybody has been successful. But there's some things that set us apart, and I believe, and as far as Reliant is concerned, why we have seen the type of tremendous growth that not everybody has, and I think we'll get into that later in the slides.
Yeah. And real quick too, Colin, with the, you mentioned last year 62% occupancy. I don't want the perception out there that we're doing terrible last year. We had bought several new properties that were in a lease up phase. And so what we're going to discuss here is how you've got those leased up essentially to where they are now.
Yes. Yeah, absolutely.
Yeah. Go ahead, Colin, sorry.
Well, I was going to say, some of those were brand new that we were in the process of just starting the lease up. Some of them were sites that had been stagnant, right, for a couple of years, and some of the changes that we put in place were able to drive occupancy.
Yeah, I think, to the group who's listening, we are a value add company. So our portfolio average traditionally, as we're buying assets that are in that lease up phase, is in that high 60s, low 70% range. I think what we've seen in the last 12 months has just been the pace at which they've leased up has been incredible. And part of that is due to the tailwinds that Colin mentioned in the market, but also some of the technologies that we're deploying across the space that we feel have a good impact. And we'll definitely walk through a few of those. So Colin, with that, that 30% occupancy, obviously that's a number of new tenants. So up over 10,000 new tenants in the last 12 months. We currently have, correct me if I'm wrong, just over 31,000 tenants in the portfolio.
That is correct. I'll give you an updated one, just over 32,000 now. So yeah.
That's great when that number is climbing. So we're seeing that occupancy growth. And for those of you guys who maybe not heard us talk about it, Colin, on the COVID side of things, what are the things that COVID is doing that is impacting people's demand for self-storage?
Yeah, I think that's a good question, and I think that's something that we have been exploring all year, right? Is how long do these trends continue? Obviously, and I'm sure I don't know if you've discussed this before, but obviously there was a slowdown of supply entering the market, right? There's not as much building going on, so and then there's more demand because of COVID. I wish I could tell you that we see that tailing off in 2 months or not tailing off. It's a guessing game. It's a guessing game for us. But to answer your question, Chris, unfortunately, there was a lot of folks that are downsizing due to incomes that are decreasing. And anytime you see that, you see the need for self-storage because folks are moving into an apartment or a smaller house or whatever. And so that certainly drives the demand as well.
Yeah, we talk about, and I'm sure anybody who's on here who's heard Matt and I talk before, we talk about the 4 Ds of self-storage demand, right? And death, dislocation, downsizing, and divorce. And, fortunately for us as an asset class, unfortunately for John Q. Public, the pandemic has created a lot of all 4 of those Ds. And so, we've all been the beneficiary of that. I think, Colin, those are the tailwinds that we're talking about. And the interesting part for us as a group is trying to understand, how does that impact us moving forward? How do we underwrite deals we're buying today? At what rental rates? Because today's rates are sky high. How long does that last? And, playing that game of trying to predict the future, which is never easy, for sure.
Right. And I think the other thing that's important to mention is, how resilient the industry was during COVID. And I brag all the time about, hey, we never changed 1 hour of operation. We were considered an essential business by local municipalities, by, state, federal government. None of my team members lost 1 hour of work. When you have just massive layoffs and unemployment, this industry and with Reliant was really solid through that whole time.
Yeah, there's no question. There's huge value in being able to maintain that talent and not lay people off. The other interesting part about storage is, and I'm sure people read in the last week, the CDC extended moratoriums on evictions in multifamily apartments through October 31st. I own some apartments. That is not great news for operators of apartments because there's no relief for the guys who have to pay the mortgage, but there is relief for people who have to pay the rent. And in storage, Colin, correct me if I'm wrong, none of our properties, we did not have to stop the auction process on any of our properties in the portfolio over the last 12 months, as far as I'm aware. Is that true?
That is correct. The only thing we did, Chris, was if someone would provide proof of hardship due to a COVID-related either illness or loss of job, we did take that into consideration and made a decision on those at a corporate level for each of the sites. But we were scared when we started that was going to be just a job in itself, and it really wasn't. I mean, we dealt with maybe 10 to 15 of those. Everything moved forward. Our business processes move forward just like any other day.
Fantastic. Well, let's circle back on the revenue growth piece, and then we'll get into some of the tech behind some of these numbers. I mean, look, 68% revenue growth is a bit of a misnomer in that this is not same store revenue growth. So our portfolio is constantly churning. We're buying and selling projects throughout the year. So, is this a great indicator? No, but what we have seen is tremendous growth. And look, as commercial real estate investors, for you who are listening to this webinar and for us, the value of our properties is all dictated off of net operating income. So if we are growing net operating income, all other things constant, then the values of these assets are growing. And as investors, that's what we're trying to do. So, we've seen just a phenomenal amount of growth. And Colin, I appreciate you sharing that. Matt, why don't we jump into, some of the tech behind this? What are some of the things, Colin, that have helped? And we'll talk about online leasing, I guess, first. What are some of the things that have helped accelerate that leasing pace that we've seen and the revenue growth across our portfolio?
Yeah, I mentioned earlier, everybody has these winds blowing in their sails. Here is exactly some of the things that we did differently. Not only technology, but how we implemented it, and the ability. Some of the big REITs, Chris and Matt, still at the beginning of COVID, going into second quarter 2020, didn't all have the functionality to complete a lease online. So we put a lot of work in early on in our SEO in 2020, made it so that we had that contactless experience, right? Everybody was looking for a contactless experience. So we won't even talk about some of the drive-through options we did at the site, but just the ability to set at home and be able to complete your lease from start to finish, get your gate code, get your unit number, and arrive at the site, open up that door and have a welcome packet. That was that experience that we really worked on at the beginning of 2020 and has paid off big dividends for us. Chris, we talk about aggregators, Sparefoot. So obviously Sparefoot was pushing us a lot, but then our website and the work we did with SEO really took that to another level where really it's a toss up whether we're in-house leasing and online leasing is almost 50-50 today.
And is that a trend that you see continuing? Let's say, and look, we're recording this at the beginning of August. I don't know where we are in COVID anymore. I'm actually working from my house because my son got exposed to COVID and I'm waiting for my tests to come back to the office. But so who knows where we are in this kind of pathway of the pandemic. But is this something that you see as a future trend for what we do moving forward? Or do people come back to the in-person leasing in the office?
I think I hear this term omni-channel all the time, right? Omni-channel and all these different options that people, the convenience of doing it however they want to do it. And, so we now utilize an app, and that app, I don't even think we have that on the PowerPoint, but, if you want to pay through your app, if you want to get your gate code through your app, yes, I think is going to continue to grow. I think the convenience factor is what most people are looking for because they're looking to save time. And everybody's still, especially now, everybody's happy to be back out, but everybody's still a little uneasy in with how they approach different businesses. So.
Well, and I think one of the things or the reasons we're able to deploy this so quickly, because I remember the very beginning of COVID, the first week I was working from home, I had to call some investors, and I called Colin and I said, hey, what are we doing? How's this going to work? What's it look like? And I think you told me we'd already been looking at the online leasing, and so that's why we were able to pull the trigger so quickly. So we were already kind of seeing the trend going that direction.
Yeah, we ramped it up because it wasn't set to launch for another month. And when COVID hit, we realized we needed it right then. So, again, we were able to implement that and get it out there. But yeah, Chris, I don't see this ever going away.
It's interesting. That's a question we get a lot from investors is how does technology affect self-storage? And I think most people are thinking in like a kiosk model, right? Where we have humanless self-storage facilities. There's no people on site and everything's done automated. But this is the one that I would say arguably probably had the biggest impact in our portfolio over the last 12 months. Agreed? Yeah.
Absolutely.
Well, so I guess taking that to the other side, Colin, if we're thinking about a second key initiative, let's talk about the call centers. So this is something that it's almost the opposite, right? Where someone actually wants to talk to a human being. So what did we do there? How did that impact us? And I know we have an example that we're sharing here on the slide in front of us.
Yeah. Well, so the example, just to introduce that a little bit, that is, I picked one of our higher volume sites. So that is on the greater scale of what we're going to see in a normal month. But we still do a lot of other things other than just lease. So you got POS, you have U-Haul, and U-Haul, believe it or not, is a lot of the phone calls that are coming in.
Mm-hmm.
Folks aren't exactly sure how to handle that platform online. And they just find out who has U-Haul. They look that up, they find out who has it. And so then they're calling us saying, what's the prices? What's, all of that. So depending on how busy our site staff is, you can see what I think is great on that display is 141 calls is what the call center took, but 108 of those are during peak hours. So that is while we are staffed, while we are open, but because of either another customer in front of us, or we're out working with a U-Haul customer, or we're out on the site cleaning and upkeeping the site, 108 of those calls we would have missed if there wouldn't have been a call center. So the way that works then is that call center answers for us. If they can answer the question, if it's a gate code, if it's a balance, what's my balance, that sort of thing, they do. But if it is hey, I am interested in leasing, it falls into that lead category. And that lead you see there, 17 leads. If they go a step further and they actually make a reservation for the person to come to the site to see a unit, you see the 4 reservations there. So it is extremely important. I love the call center. It makes sure that we don't miss any pieces. They send us an email to the site and they say, hey, we just had a conversation with John Smith. Here's what he's wanting. Could you give him a call back? And we are attempting that notifies alarms start going off on those desktops and on our phones. And we attempt to get back to that customer within 5 minutes as possible, or before they call extra space, right? So,
Exactly.
So before they call the next operator. So great things from the call center, Chris.
What I think is interesting with that is it's not just taking a message and relaying it to us, because that's a benefit in itself. Because I worked at a facility and it's crazy during the peak U-Haul hours in the morning, especially on the weekends. There's 10, 15 people lined up trying to get U-Hauls and everybody's running around, but that they're actually able to handle some of the issues, check bounces, get into our system.
Absolutely.
Yeah, that's just kind of a whole other level of the call center.
The site line, go into the customer's account. They have visibility to all that.
Right, and they can take a payment as well, or?
Correct.
Okay, awesome.
That's fantastic. Anything else you think worth, call center for the highest level, it is what you think it is, right? Somebody else answers the phone if we don't, and hopefully collects those leads and routes them to the right person. The other thing I think it does from Colin's team side of it on the operations side is they can see who's converting leads. And if there's an issue where leads are coming in that aren't getting turned into reservations, right? We have a tracking device to say, hey, Mr. Site Manager or Mrs. Site Manager, there's an issue here because your rate of conversion is a lot lower than somebody else's. And maybe it's a training issue or maybe it could be a personnel issue. I think it just gives us those data points to make that decision and look at our team a little bit more critically. So Matt, let's move to the next one. And because I think Veritech is something when we think about our revenue growth, this has been a huge part of it. So Colin, maybe at a high level, just explain what Veritech is, and then we can get into the descriptor that we have down below, which is a good example of how Veritech helps us set pricing.
Sure, yeah. So Veritech is our revenue management software that we use. Veritech at a high level, what it does is every day you go in, when you first buy a site, we set up the competitive set. Who are the competitors? What do we rank them? And then every day Veritech is going in and scraping prices off their websites, pulling them into a dashboard for me, and then saying, here's their price, here's your price, here's your occupancy. I mean, the flags that it takes into consideration are innumerable. And then, but at the end of the day, it says, here's a suggested rate that we would like to give to you. And then we have the option to yep, we're going to take that rate, or no, we're not. So Chris, I think the biggest thing to point out about this is old school self-storage. We did those paper comp studies and we did them as often as we could, maybe every 2 weeks. If it was a site that was struggling, we did it every week. And then we would go in and we would kind of change some rates to be more competitive. This gives us the visibility to every day be competitive and, change course if we need to based on a competitor.
And Colin, does this feed into our operational software and or our website, the customer facing websites? Is that how it's affecting price for, potential customers who come through the web?
Yeah, it interfaces perfectly. So as soon as I hit upload or enter on these prices, what it does is it updates our system, our SiteLink system overnight. And then leading into this graph here, Chris, that next day, every site receives an email that gives them their unit type and their price, but it gives them 3 prices for every unit type. And that's what this is. It gives them a best value, deluxe, and it gives them a standard price. And so if it's standard, that's the lowest of the low. That's what we got to get them in at. But you can also upsell depending on the location of that unit. If it's first floor, closest to the door, closer to the elevator, closer to the bathroom,
whatever you can come up with.
Yeah, whatever it is, it gives the site 3 prices. And if they can push it to a best value price, we get just a little more money. And if they can push it to a deluxe, that's even better. But you can see this site that I pulled right now, just in the last 90 days, 17% of the time they're not just getting the standard rate, they're able to push that rate up to the best value rate and capitalize on just a little more revenue.
Colin, is that a function of the sales ability of the site manager, who the person comes and talks to?
It absolutely is. And I'll tell you, we've got some employees out there that they don't even need this because they are so good at doing it themselves. But then we have others that aren't as comfortable with that piece of sales. And so this really breaks it down for them to a point where it gives them to the dollar of what they can charge more. And it also assigns those units based on a desirability ranking that we submitted on where those units are located. So,
and just keep in mind for everybody listening that when Colin talks about unit types, there could be 10, 15 unit types in a particular facility, right? We have all the different sizes, 5 by 5, 5 by 10, 10 by 10, 10 by 20, 10 by 15, et cetera, et cetera. Then you have those in climate controlled and non-climate controlled. So all of the pricing adjustment is based off the occupancy of that particular unit type, right? So if we have, 10 by 10 climate controls are in a particular facility are full, well, then we're going to raise prices very high if there's any availability. But if a 10 by 10 non-climate control is, let's say 70%, we're going to lower prices or add more value there to allow people to come in and get those leased back up. Is that a fair summation, Colin? Because there's a lot of moving parts here that I think most people don't understand. Because, let's use apartments as example. Maybe you have a 1-bedroom, 2-bedroom, or 1, 2, and 3. They're generally a couple of unit types. In the storage platform, you have, multiple unit sizes, multiple unit types, climate, non, et cetera.
That's perfect. That's perfect description. And the other thing you have to consider too, we've talked a lot about physical occupancy on this call. What Veritech does with the pricing is push that physical occupancy, but On the backside of Veritech, we also do our rate increases through the software. And so, there you're going after the economic occupancy that we talk about so much. So we want the economic chasing the physical as quickly as it can. So this technology has enabled us to do those things.
And we did have a question. The question is Veritech a software provider? Yes. Basically, it's a software package that we pay for. It's a third-party vendor. We're inputting a bunch of information in the beginning to kind of get our parameters set. And then that's feeding Colin specifically and his team information on a daily basis, and is certainly dynamic. I mean, if we change kind of our strategy in a particular market, Colin can make those changes on the fly.
Yeah.
Matt, why don't we jump to the? Oh, sorry. Go ahead.
No, all I was going to say is it's not a software that you hit the go button and it just runs for you. I mean, that's where I was talking earlier. Yeah, we do have this technology, but operations, if I can brag on us a little bit.
Please do. That's why we have you on here.
Yeah. Well, the team here at the office, the market manager, the team in the field, it takes, Chris, I mean, I know from experience, it takes a 2 or 3 hours a day just utilizing this software. So it does take a lot of hands-on making it happen.
And we discussed this earlier, Colin, that back to that subject of there's great technology out there. This is available to everybody, but it's how you implement it and the team behind it. And even for the call center, like the call center can take all the calls in the world, get you all the leads in the world. If you don't follow up on those leads and bring those people in, it doesn't do you any good. It's a waste of money. All right.
We just got another question maybe before we jump in regards to Veritech. How accurate is the information Veritech receives from others? I mean, it's probably more accurate than we could do on a manual basis. Colin, you can speak to it probably more specifically than I can, but ostensibly what Veritech is doing is scraping the rates across all of the competitive websites or competitive storage facilities in a given market and giving us an average rate of where we stand. Is that a fair way to represent what it's doing?
Yes, and it goes into as much detail as the type of specials that they're running. So if they're, it might be a $70 for a unit type is one thing, but $70 and 50% off for the first 3 months, well, that's something totally different. And so we have to, we have to adjust our pricing based on that. So it will even pull down to that detail, what type of promotions that they're running at the site.
I didn't know that. That's pretty good.
So let's move on to Google My Business. And I think, look, depending on the age of the participants who are on the webinar or listening, there's a pretty big distinction as far as how people use online reviews to make decisions. But I think it's inarguable that there is an impact to when you Google a business, and if you see a low review score with a number of reviews or a high review score, a 5-star review versus a 2-star review, and there's 1,000 reviews, it definitely impacts us. And it impacts the way that you view how you make your decision. So Colin, I know this has been a huge, the next 2 slides are going to talk about this. This has been a big initiative on the operations team to build up that online presence. So when people are finding us, you're getting, a good first impression with people who see us on Google. So maybe walk through some of the initiatives around how we built out the Google My Business update.
Yeah. Well, this one is big. This one is big. And what I love about GMB or Google My Business, what I love about it is it cannot be purchased. It can only be influenced by hustle and by effort. And so if you are doing well in your GMB, it means you've been working at it. Whether it is the amount of reviews or the rating on the reviews, everybody looks at this. 90% of folks, if you are visiting another town, you are Googling hotels or restaurants, and you are looking at comments from customers. And so this has just a big impact on the business itself. One of the, and I don't know, Matt, if you want to show them that next. So one of the third parties that we partner with is Podium. Podium is one of the best in the business at this, and you can kind of see. I just gave you guys a really quick screenshot of the dashboard for one of the sites, but it shows you how many leads are coming in, how many reviews. The web chat function comes through Podium, goes directly to my supervisors in the field, and they can begin to have a text message back and forth with customers with questions on the website. But then, it many times turns into those Google reviews, and Podium will automatically send out review invites for you if it is a new lease up. But we also have the ability to manually send them out through the platform at each site.
So Podium is the vehicle that we're using to essentially prod or encourage our current tenants to produce a Google My Business review.
Yeah, it will send them a link. If I type in your phone number into this dashboard, Chris, and type in your name and hit send, it'll send you a link that goes straight to that Google review. And so we try and make it as easy for a customer, because they don't want to go through 3 or 4 or 5 clicks or have to look up a website. They want it very easy. It comes right to their phone as a text. Click on the link, fill out the review. One of the best stories that I've heard here in the last week is the way that Google treats the GMB is the more activity. It's not just necessarily your rating, it is the activity that is surrounding your GMB. They love to see that. Their analytics will pick up on that, and it'll push you to the front. So we had an example. I won't call out the site in particular, but if you type in self-storage near and put the name of the town, 2 weeks ago we came up 4th. And it wasn't because we had a bad rate. It was 4.5 rating. That's our goal. But it was just because there were some higher rated sites in front of us. Just a few days ago, just because of all the activity, whether it's updating our listings, our photos, our posts on the GMB or reviews, we still had a lower rating, 5.0 and a 4.7, but we were pushed to the top of the page. And here's the stat that's important. 60% of people click on the very first business that is listed when they do a general search like that.
Yep.
So
Yep.
60% of the people, just not because our rating had gone above everybody else's, but because of all the activity we have going on with our GMB, Google pushed it to the top of the page. And it's partners like Podium that are helping us get that done.
And that's that implementation piece as well. It's the person who that site manager hustling, staying on top of responses to reviews or questions, all that kind of activity is what helps generate that.
Yep. Updating photos, making sure your hours are correct, posting on there. One of the things that we're working really hard on is when you go to that GMB, there's going to be a function that you can just message. You can click message. You can always click website, phone, map.
Right.
Now, we're working on one that, 2 things actually. We're working on a messaging app, a button, so you can click, it'll go right to my supervisors from that GMB. And then we have a photographer in the field right now, Matt, that is taking 360 camera shots.
Nice.
So you'll be able to go into that GMB and log in and do a 360 of all of our offices.
And that'll all be on that first page when it pops up right there.
Right as you pop up.
I
Yep.
like it.
One click.
I like it.
That's hugely helpful. Well, look, I hopefully that's helpful for people to see a little bit behind the curtain. I think for us, if I was to put a theme on what we've done in the last 12 months is really deployed, and Colin and his team should get credit for it, but deployed some really impactful technologies. But all of it is somewhat rooted in how do we take the digital side of our business and continue to improve that? Because you know, it's the internet is not going away, surprisingly. That's the thought of the day for those of you listening. You know, more and more people obviously are consuming everything through what they get on their phone, through the web. And so, you know, we have to continue to up our game in that regard to make sure we're always going to be one of the most attractive options out there. And I think some of the technologies, Colin, that you shared with us today are some of the reasons we've seen, you know, such great success across the portfolio in the last 12 months. And you and your team should get a lot of credit. And if we do have any investors on the line who've seen that growth in their particular investments, you know, you can thank Colin and his team for all the hard work, because it's certainly been a big win for Reliant. Colin, anything else that you'd want to leave our current listeners and people who may be listening to the recording at some point in the future with?
Yeah, well, one more thing. Can I take a moment just to give Matt a hard time?
Yeah, that's what these webinars are all about.
So I'll tie it in though. In all reality though, we joke a lot. Matt's a Georgia Bulldogs fan. I'm a Clemson fan. We're down here in the heart of SEC country. We got football kicking off here in a couple of weeks, and one thing you hear a lot is a commentator maybe break it down a play saying, "Hey man, he had it in the air, but he just couldn't land it." And I think of it that way operationally, Chris, that all the technology in the world, you may have it in the air, but you got to land it. And so I'm really proud of my team this last year, because they have executed at a high level. They've landed it pretty well, and we've seen some really great growth.
That's a good tie-in. Wow, I didn't know that was going to call.
I didn't either.
Especially with going to Clemson.
Go Tigers.
Good old.
Well, from our perspective, for those of you listening to this webinar, look, our goal is to give you kind of a peek behind the curtain of Reliant. And if you're interested in continuing or looking at how you can invest with Reliant, we currently are working through a fund called Reliant Self-Storage Fund 2. If you have questions on that and want to learn more about those passive investing opportunities with Reliant, you can certainly reach out to Matt or I. We'll be happy to send you some information. Or you could check out our website, reliant-mgmt.com. That'll get you quite a bit of information, as well as some contact us. And then, for the webinar, for those of the people watching on the recording, there'll be a button down below if you'd like to get in contact with us. And we'll have that available for you as well. So if there are any questions that people have, feel free to throw them in the chat box. Otherwise, we'll wrap this up. We're just before 45 minutes, so a little bit longer, but Colin had a lot of good things to say today. So it looks like
30 minutes, so it's his fault anyway, so it's cool.
Usually it's me who talks too much, but looks like we don't have any additional questions. So for those of you guys who are on, I appreciate all the time. If you have questions we didn't get to, just email Matt or I, or if you're interested in on the investment side of things, we can certainly get you that additional info. But thanks again, Matt, Colin, appreciate you joining me this afternoon.
Thanks, Chris. Colin, appreciate your time. Thank you.
Bye, guys.